Hi everyone, it's great that you could make it to this first community call. My name's Cody. I'm one of the contributors here at Lyra. If you have any questions while we're talking today, just message the community call text channel and we'll read it out at the end to answer. So it was really encouraging for us as a team to see the response last week since announcing. There's now over 900 people here in the Discord, and we're really excited to see how this community develops and just how we get to know each other as we build Lyra together into something that'll be around for many, many years to come. So we'll be having these calls fairly periodically into the future to provide updates for governance voting and also just some exciting community events that we have in the pipeline. So I'll pass it over to Mike to do an intro for the project. Thanks.
Thanks, Cody. And yeah, thanks everyone for joining. Really appreciate it. This is our first attempt at a community call, so bear with us if we, make a few mistakes, but we'll do our best. As Cody said, we're really appreciative of everyone showing support to the project over the last week or so. It's been really supporting for us. We've been working, for a long time now, and it's been great to get some good feedback from the community. So what I'm going to do today is basically just provide a brief overview of Lyra. There's already a lot of information out there that some of you have probably gone through, maybe others of you haven't had time yet. So I won't, in the interest of repeating everything, I won't carry on for too long. I'm just going to provide some high-level context about I think the design process and the design decisions that we've made to build Lyra. Yeah, so basically, we built an automated market maker for trading options. So there's a lot of you probably know when you trade against an AMM, basically you're trading against a smart contract that holds money, and it also holds logic for basically determining the price and the way you exchange with the protocol. So there's two types of participants in AMMs. The first is the trader, obviously wants to buy or sell the product that's being offered by the AMM. And the second is the liquidity provider, and they want to basically earn return on their capital, earn a positive return on their funds. As we know, the AMM model has been really important in the development of DeFi. It's allowed on-chain spot and lending markets to grow and thrive. And it's also for the first time given permissionless access to the role of being a market maker, which is a really interesting innovation that's come out of DeFi and really only been enabled by the AMM model. So AMMs have worked really well in spot and lending markets, as we've seen with things like Uniswap, Aave, Compound, but they have struggled in derivatives. And the primary reason for this is risk. When you provide funds to an AMM, basically you're taking on the risk of being a market maker. You are passively market making for that product or service. This risk, as we know, is called impermanent loss in the spot market context. And basically it's the risk you carry when you're making a market. The thing about options is they're much riskier products than swap markets or lending markets. The risks involved in options are very complex and very large. So Nick, one of my co-founders, used to be an options trader. He can talk for a long time about just how risky these products are, but in essence, they're a whole lot riskier than anything we've seen before on chain. And when you're selling a risky product or you're making a market on a risky product, you basically need a high yield to incentivize people actually providing that capital, taking on that risk. So with high yields, the thing about high yields is basically that means high fees, right? And when you have high fees in an AMM, you introduce a bit of a tension between the traders and the liquidity providers. So the higher the fee, the better it is for the liquidity provider because they're getting compensated for risk, but the worse it becomes for the trader. And if you play this out, it gets to a point where the product just becomes uncompetitive, unviable, and really no one's going to bother trading it because it's just not worth it. It gets too far above the fair value of the product. So one of the core kind of driving idea behind Lyra basically is trying to reduce this tension. We'd like to basically reduce the risk incurred by the AMM if possible, so that we can ideally offer a price to the trader that reflects, closer to fair value. This is pretty complex though to do in the derivatives context because, as I mentioned before, these products are really risky and they're very hard to measure these risks on chain. That is something that's been done a lot in the traditional world. Again, something that Nick spent a lot of time doing in making markets and options is measuring risk basically and working out how to manage it. So a lot of you guys probably know about the option Greeks. So I won't get into too much detail here, but they basically define the position of risk for an options trade, or in our case, our pooled liquidity options AMM. So what we're trying to do basically is build a way to first measure this risk on chain, which turns out is pretty computationally difficult to do. When you have a pooled liquidity model, you basically have a pooled risk model as well. So pooled liquidity is great because it allows us to aggregate liquidity and offer lots of different products and variants on the options, but it also means we share the risk for all those products. So what we need to do is basically work out what the exposure of our pool is to each one of these Greeks. Or in our case, we're focusing on Delta and Vega. I'll let Nick get into that a little bit later, but we basically want to work out what the net position of our liquidity pool is in terms of some of these Greeks. And this is kind of the first, I think, core design challenge that led us to the realization that options really aren't meant for L1. We need to basically iterate over our entire pool's exposure, which is basically linear in the number of listings we offer, to work out what is our net exposure to the asset risk or to the volatility risk of the product. So this is something basically that informed our decision early to build this protocol natively for Optimism, because we need an extra order of magnitude, or maybe even two, in terms of scalability and compute to work these things out efficiently, and to avoid passing on really, really high gas fees to the trader or to the liquidity provider. So basically, like, as I said, just to give a bit of a recap, we're an AMM for trading options. We're trying to basically provide the best prices on chain. And the way we think we can best do that is by being the first protocol to actively measure and then manage risk on chain for our liquidity providers. And that should help us to basically escape this tension, or to reduce this tension in order to provide better prices for traders, and hopefully generate a bit of a positive feedback loop where we can offer better prices, more liquidity, and that keeps going round and round. So what I might do, just in the interest of time, is now pass over to Nick. I think Nick's going to give us a bit of a run overview of basically how we manage that risk in Lyra, and some of the other questions that have come up that are a little bit more detailed with the mechanism. So Nick, do you want to jump in?
Yeah, sounds good. And before I do, just wanted to shout out a couple of people in the mechanism chat who've been active, like I think who I can see here now, Telenik and Zap. You guys have been asking really good questions and suggesting, having a lot of good suggestions. So it's been really good already getting into some of that discussion. And, as someone who's been in options for a few years and, traded throughout the pandemic and then the GameStop saga before I quit to do Lyra full time, like, I know that this mechanism isn't perfect, but I think it's a good start, and there's lots of things we can do to improve and build on this foundation. So thanks to those guys and everyone else who's contributed and gotten involved so far. So as I said, I'm Nick. As Mike said, I'm Nick. I'm a contributor and co-founder at Lyra, focused on the mechanism and mechanism design and options trading specifically. There are a few sort of mechanism questions and misconceptions I'll clear up here. I'll keep it fairly high level, just in the interest of time, and also because of the level of discussion that's already happened in the Discord and the detail that's in the docs. But I'm happy to answer all questions that come up too. But some of the most frequent ones we get is like, how do you manage delta risk? How do you manage volatility risk? And the third following from that is like, does this mean like I can't lose money if I LP? And so I'll go through and answer those now. So in terms of delta risk, as Mike mentioned, this is the risk that you take to, like, the risk that liquidity providers are exposed to the underlying asset that you're trading. So if we have an ETH options pool and we find that the delta risk is short, 1,000 ETH, that means that for every dollar that ETH goes up, the LPs lose $1,000. And we can go and hedge this risk. We can calculate it by iterating over all of the listings and doing a computation. And we can go and hedge by composing with synthetics, which is where this integration with synthetics comes in. We take money from the liquidity pool and go and buy 1,000 ETH on synthetics and hedge that exposure for LPs. And that sort of done periodically by a keeper function. It's an incentivized community function that anyone can call and earn Lyra tokens and rewards for, which keeps the pool relatively hedged on the delta front. Volatility risk is a little harder to manage. There are a few things, that have recently come online, like Volmex on chain, that could be a useful integration in the future to hedge for us. For us, we've decided to tackle volatility risk by incorporating it into the fee function. So volatility risk is the risk that the pool has to sort of, either buying or selling options. If we're really short options, then that means the pool is short vol, and vice versa for long. So for us, we've incorporated that into the fee. So what does that mean? Well, we calculate the net Vega exposure, which is the exposure to implied volatility of the pool. And depending on whether a given trade that is proposed is hedging the trade or not, we charge a fee that is proportional to the size of that risk. So if the pool is extremely short options and we have a trader coming in to try and buy more options, the fee will continue to get larger and larger for those who want to continue buying options. So you might find that the Black-Scholes fair value of an option is, say, $150, and the pool might buy it for $145 and sell it for $180, creating this asymmetric spread, which incentivizes people to sort of hedge the pool, or at least penalizes them for continuing to increase the risk of the pool beyond certain thresholds, which will all be determined by governance processes from the outset. So that's volatility risk and delta risk at a very high level. And the third question, does this mean I'm fully hedged and can't lose money if I LP because we're just hedging these Greeks? Absolutely not. Like, options are still very risky. But managing delta and IV risk and having mechanisms for that gets you a decent way there to at least stop either relentlessly selling options or buying options to a point where you can provide competitive pricing and spreads which are like attractive to traders. But certainly with options, still risk. Even if you do everything perfectly, perfect, you can still experience large drawdowns from writing and selling options, which is why the yields are comparatively higher in options than they are for things like spot market making, just because of that increased risk. I'll pass it over to Dom now for a bit of an overview of the protocol and where we're at.
Yeah, hi guys. I'll keep the protocol update brief. Our contracts have gone through a preliminary audit, after which we have decided to add in a few additional features. Primarily, we wanted to have option positions be tokenized in an ERC 1155 contract. This will allow for easier integrations and trading Lyra options on secondary markets. We're currently planning our final audit and should have everything ready and audited around the end of July or early August. By then, we hope Optimism will be ready for us to deploy our contracts to mainnet. Besides that, we'll open source our code a few weeks before going to mainnet. Pass back over to...
I think it might be me now. Going to talk on the roadmap. Cool. Thanks, Nick. Thanks, Dom. So yeah, basically a little bit of a brief overview from some of the team here on their different sections of expertise. One thing we want to talk about, I guess, is the roadmap for the next month and what that looks like. So as I said, we've been building for basically since the start of the year, basically in isolation. So it's been a bit of a lonely struggle, but now that we're ready to open up to the community, there's a couple of things that we want to kind of announce today. And the first one is our public testnet. So we're going to be going live to our public testnet on the 30th of June. So that's next Wednesday, I believe. We'll post a time shortly after this call to just clarify exactly when, but we're going to open up the contracts on Optimism Kovan integrated to our dApp, and I believe Jake is going to give us a bit of a walkthrough of that later. So what the purpose of that is really is to give the community a chance to use the product and to really get some valuable feedback on, one, the interface and how we've designed the interface, which you'll see a little bit more of later this morning, but also to be able to use the contracts and to see how the mechanism develops. So, Nick spent a lot of time thinking about, parameters and configurations for a lot of the important parts of this mechanism to make sure that, our LPs are most protected and our traders still get as good as possible in terms of pricing. But, the reality is that it's very hard we've done a lot of simulations, but it's very hard to be sure of the exact right values without seeing how the mechanism performs in a live environment. So I think for us, the goal of testnet is to really see, how does the mechanism hold up? Is it ready for mainnet? Is it ready to take real funds? And we're confident that it is, but we want to have that process be basically as formal as possible to ensure that funds are protected and things go smoothly. So that's going to be starting next Wednesday on the 30th of June. We're going to release a blog post about that with some more details, but basically, as I said, on Optimism Kovan, hooked up to our dApp, and it'll be a live system. Some of our integrations with synthetics will be using contracts that we've mocked for now in terms of token contracts, because it's easier for us to control the balances if we control the contracts, and we need people to obviously have access to, a decent amount of both stable coins and also, other assets as well, so they can trade. I believe we're going to be launching the testnet with 5 markets. So that's Bitcoin and ETH, obviously, and then we have some test markets for Aave, Link, and Uni. We probably won't be launching mainnet with these, but we are ready to launch in testnet and just see how they perform. So we're all pretty excited for that. Been working hard to get towards that. We're going to run that basically for about a week and a half, and then we're going to sort of follow the testnet with what we have is like a testnet trading competition. That's going to be basically an incentivized competition, still running on testnet, so we won't run real money, but we're going to basically reward people for trading on Lyra, and we're going to reward people for whoever the most profitable is, whoever makes sort of interesting trades and things like that, and really try and incentivize people to use the product and keep that feedback going and really see how the mechanism performs. So that's going to kick off on, I believe, the 12th of July. I'll just get my calendar up here to double check, which is the Monday, sort of a week and a half after we launch testnet, and we're going to run that for 2 weeks through to the 26th of July. So we think that'll be an interesting way to see it, as I said, the system perform in a real context without, I guess, real money. Yeah, so that's basically the plan for July. As I said, we've spent a lot of time on the contracts, a lot of time on the dApp, and we're ready to get them out there and basically into people's hands. So we've kind of built the roadmap for the next month around optimizing for both of those teams. I think maybe now we're going to have an announcement from Jake. Is that right? I realized, Cody, you're supposed to MC this, and we kind of just jumped into it ourselves, but is that where we're up to now? We're up to Jake?
Yep, that sounds good.
Cool. All right, Jake, well, maybe you can give us a little walkthrough of what you've been working on.
Yeah, absolutely. Hey, guys. Let me just share my screen quickly. 1 sec. Cool. Can everyone see this?
I can see it.
Cool. Awesome. Yeah, so as everyone's been saying, we've been working on the contracts and the dApp for a long time, since the start of the year, just constantly iterating. And we've really just been trying to create the best on-chain options trading experience for DeFi users. So we're super excited to share this with you guys. I'm basically going to be just walking through the trading dApp and how it works, just for the trading side, not the pool side today. So you can see here, this is we really took inspiration from products like Uniswap and then also centralized products like Robinhood. So for Uniswap, we really wanted it to feel like a native DeFi product. So we want it to feel familiar to users that are coming on. But then also for Robinhood, we wanted to take Robinhood's balance between usability for someone who's buying an option for the first time, but also efficiency for experienced traders. We think Robinhood strikes the best balance between those two things. And ultimately, the goal is that we want someone who has never traded an option before to move through our dApp and basically understand exactly what they're buying without having to leave and necessarily follow any tutorials or watch any YouTube videos. We want the dApp to kind of explain itself and let users go end to end. So with that in mind, education and transparency with information about, risks and profitability is really important here. So we're going to go through all of that stuff. So on the left-hand side, as Mike said, we have these 5 markets that are going to be available on testnet. Can switch between them really easily. Then over here, we have the spot price chart for the base asset of that market. So ETH in this case. Really nice chart that you can slide across, see the change over a day, a week, 2 weeks, and a month, and easily toggle between those things. Then here we have the option board, which we'll go through in detail. And then at the bottom, we also have the list of purchased options, including your profit and loss for those positions. So yeah, going back to the option board, as Mike mentioned when we talk about the mechanism, one of the really special things about Lyra is the ability to both buy and sell calls and puts, which is unique to Lyra, and we're very proud of that capability. So to buy an option here, right, you can see you can select your expiry in this drop down, can toggle between buying and selling and calls and puts. And then you can select your strike from this list. So if you click on one of these rows, you can see the Greeks and also the implied volatility for that particular listing. You can also click through the details to see all that stuff with more information. And really the experience starts when you click on this plus button on the price for one unit of that or one amount of that trade. And you get this really nice pop-up on the side where you can buy to open a position, right? So the thing you're going to do is enter an amount at the top of this form. You get to see your total cost for that particular option marked against your balance for your wallet at that time. You can see that the quote asset here is SUSD. And then one thing we're really excited about is this profit and loss chart, or expected profit and loss chart. So this is really one of the first things we wanted to include in the dApp. Like way back in, I think, February or March, we were talking about this. And we started building it, and then Robinhood actually released the same feature. So it's nice to know that we have our finger on the pulse in terms of usability for options trading. And you can see here, like in the case of buying this call, I'm scrolling across on the left. So x-axis is going to be the price of Ethereum, and then the y-axis is going to be my profit as the price of Ethereum changes. So I scroll across here, and you can see that my loss at the moment is just the total cost of the option. And then I hit this break-even point, which is around $2,450. And then as the price of Ethereum goes up, my profits go up. So this is like a great educational tool for users that are new to options trading, because it really just makes your expected profit and loss super clear. You can also click on this if you want to see an expanded view and look at things more granularly, which we think is really awesome. You can also see other information like trading close here as well, which is all super helpful. So if I go through and buy an option, come back, you can see I'm taken to that same page, that same details page that I showed you before. I can see the history, so the option I just bought. And then I can actually buy to further open my position, or I can sell to close. And if I sell to close, like my current open position, you can see my expected profit and loss, which is, again, all super helpful information, super useful information. Yeah, so this kind of goes through the trading flow. You can also notice just how fast that transaction was on Coven Optimism, like really less than a second to complete the transaction and then be redirected to this purchased options page, which is super exciting. Cool. So coming back, I'm going to show you a slightly more complicated scenario. So selling a call. So this is like writing a covered call, for example, and maybe I'll switch to a different asset here. Cool. So say I want to sell a covered call here, right? This is a more advanced strategy. So we're selling an option to the AMM. Now I'm going to enter the same amount for my contract size again. But you can see here instead of total cost, it's the amount received, right? So this is the amount you're going to receive when you put down the 20 link. And then you can see here we have the required collateral, and the balance is now represented in link to show that we're putting this down as collateral, and that's what we're going to be paying with to write this option. So I can approve by MetaMask, and then I can sell that option. And again, I'm taken to the similar page, but instead you can see a sold 20 link. Yeah, so they're really the basics of the trading experience. The things we're going to be adding soon, another thing to highlight is that you can see all of your open positions. So the two new ones that I've added here at the bottom. So what's going to come next? We're going to add a portfolio tab so that you can see your purchased options across all of these markets and understand your net profit and loss based on your wallet. And then we're also going to add the pools tab, obviously, so that LPs can come in and get a better understanding initially of how we're protecting LPs and managing their risk, and eventually allow LPs to deposit funds into the pools. So that's a brief overview of the dApp. would love to get everyone's feedback on it. And yeah, just hear about your thoughts. We'll again post a recording of this call, so you'll be able to go over that again in detail and spot all the nuances of the interface we've built. But yeah, I think we're super excited to get this out to you guys next Wednesday.
A couple questions for you here in the chat. Will there be a dark mode?
So let me look at the chat. Will there be a dark mode? Yes, there will. We haven't prioritized dark mode. If you guys think it's really important to have, then we'll definitely add it. Probably like a couple days work. But yeah, we might have to prioritize things like the portfolio page or the pools page before we get to dark mode. I guess it is one of those standard things people expect now.
Cool. So there's a couple questions in here about setting up more complicated strategies, iron condors, butterflies, that sort of thing. What's the plan for being able to execute and do those sorts of strategies?
Yeah, I can take this one. So for V1, like you can execute those strategies individually, but we won't have like one-click straddle, strangles, condors, and flies until we're looking at that as a priority for V2, but not set up to really price those things as competitively as we would like in V1 if you just execute them individually. We will look to build a position visualizer as well, as one of the sort of features for the dApp, but at the moment not as accommodated.
Oh yeah, thanks, Jake. That was really great. Jake's been working really hard on that, and he brings a lot of product experience from his previous career. So I think we can really see the benefits of that coming up already. Do we have any other questions, Cody, in there, or anything generally people want to ask at the moment? Happy to kind of wait around for a few minutes and field any questions.
Yeah, there's a good question here from Paul Pitarco. I'll just read it out. He's one of the maintainers of Yearn's SNX Vault, and he was wondering if Lyra would be able to hedge the SNX debt pool. Is us operating on L2 going to limit that in any way, or will there be a way for them to integrate?
So yeah, we're native to Optimism, obviously. So in terms of an integration at the protocol level, in a smart contract, it would be difficult to do that trustlessly between L1 and L2. It would definitely be possible to come and hedge positions you've incurred in this next debt pool on Lyra's trading platform, but you wouldn't be able. You basically have to do it come onto L2. So it would be more of a manual process. I think in the short to medium term there will be a bit of a delay with integrations because there is still most of the activity on L1, but we really do expect that over the next 6 to 12 months, as Optimism, Arbitrum, and these other platforms really come to scale, that a lot of that activity is going to come onto these platforms. So short answer is yes, but not in an automated fashion. You'd have to basically set up a strategy on L2.
Awesome. Thanks. So Nick, maybe you could run through the difference between Thales and the difference between binary options and what we're doing, and how they kind of complement each other as products and in the SNX kind of ecosystem.
Yeah, so Thales is binary options, which is a very different product to the one we're launching, which is just standard options. So binary options are sort of a more exotic option which pay out an amount if it just simply finishes above the strike price. It's either 0 or 1 kind of thing. Whereas ours, it's kind of more of a continuum once you hit the strike price, and can provide these sort of non-linear returns. So it's a very different product, but what they're doing at Thales is really cool, and the team is really strong, and we're big fans of them.
See a question in here about liquidity provision, and so we've been focusing on the UI for the trading side of things first. The contracts are written to take liquidity from anyone. However, we are we're conscious of the fact that this mechanism is complex and there's a lot of moving parts, and we want to make sure that we are confident that it really works and that it's really secure before we open up liquidity provision to the community. So we're considering at the moment maybe having a sort of restricted liquidity provision at the start, which is taken on by the Lyra DAO and maybe some other parties that are close to the Lyra DAO. That would be a temporary measure if we do choose to undertake it, just to make sure that we are not risking the public's funds before we're really confident that it works. We're not sure on that yet. Still kind of trying to work it out. And I think the testnet will be a valuable sort of piece of data to work out how confident we feel before mainnet. But yeah, so that's kind of where we're at with liquidity provision. Really just trying to make sure that funds are safe.
Awesome.
I see the suggestion there for realized vol on the price chart, like 30-day historical realized. That's a good shout. We'll have a chat about that. That's one to include. Good for decision making.
Just about the new tokens, I think this is kind of an interesting one people have. So basically for us, launching new tokens on Lyra in V1 is a governance process. As I said, we're going to be launching with ETH and Bitcoin. Our main requirement in the first version of the system is the ability to basically hedge that asset on synthetics. So I know the synthetics team are working hard to basically get assets moved over to Optimism. I know they're launching with synthetic ETH, Bitcoin, and I think Link as well, I believe. So those markets will be basically available to us from the start. But I've been speaking to the team there, and they're very keen to get a bunch of the bigger DeFi tokens across onto Optimism, which is great for us because we really expect that a lot of the most useful markets will be things like the big DeFi tokens, and that's because there really aren't any great places to trade options on things like Link or Uni or Aave, even in the centralized world. So yeah, we're going to be actively working on making sure that they come online as fast as possible. All right, maybe we can wrap up there, Cody. I'll hand over to you.
All right, thanks guys. Yeah, so again, thanks for the contribution. Really appreciate the suggestions, and I think as a team we're going to go back and talk about some of these things, particularly what we can include in the dApp. We're going to have we're going to publish a roadmap with those specific dates over the next couple of weeks today on Twitter, so keep an eye out for that. We'll also post a specific kind of video of Jake breaking down the dApp a little bit more before that time. To go through all those features in a little bit more detail. So thank you for coming to our first call. Really appreciate your time today, and we look forward to seeing you more in the community. That concludes our call. Thanks, guys.
Thanks, guys.
Thanks, everyone.
Thanks, everyone.